Hi there. Are you in the process of purchasing a home? When I speak with home buyers who contact me for their financing, one of the first questions I'm often asked is, what's your interest rate? Well, let me be honest with you. Interest rate is probably about the fourth or fifth question that you should ask. There's two very important ones that come before that. Number one is, how much is this going to cost me out of pocket at closing? Is it just closing costs, or am I going to have to pay discount points? And number two, how much is this going to cost me out of pocket each month? And that can vary depending on obviously the interest rate you get, but if there's mortgage insurance required or other things in addition to that. Even homeowners insurance can certainly change your payment. So when evaluating rate scenarios, it's important that you're making an apples to apples comparison. Now, you can choose the lower rate, but you need to understand that there could be a higher cost up front. And sometimes it makes sense. So as an example, let's say you would pay an additional $2,000 at closing to save $25 a month, or about $300 a year. So if you're at that savings, it takes you a little over 6 years to recoup that money out of pocket. Again, it may or may not make sense, depending on how long you're going to own the home. However, listening to some of the economists and some of the other people who've been right quite a bit in the past, it sounds like interest rates are going to be going down, probably within the next 12 to 18 months, and maybe even by this summer. So if you have an opportunity to refinance to get a better rate, and you've paid this money out of pocket up front, and it's going to take you 6 years to recoup, it may not make sense. It may not be the right thing to do. So the other thing we should do is ask the seller if they'll consider paying some discount points or even seller concessions for you to bring the rate down. There is a 2-1 buy-down program that is pretty awesome, in my opinion, that can help you out. And if you have questions, I can certainly go over that with you. But if you end up having to, for example, ask the seller for an additional $5,000 in seller concessions, and you'll pay $5,000 more for the house, that changes your payment by about $25 a month. And let's say over 18 months that you decide that you're going to keep the house and maybe refinance later on. That 18 months that you've paid an extra $25 does not come out to $5,000 total. So there's a way to structure these loans for you so that it makes sense and that it benefits you. It's not just selling money, it's helping you achieve your short-term and long-term financial goals in the best way that we can. So if you have questions about how to compare rates, what your next step is, or how to shop for a loan in general, feel free to reach out. We're always here to help.